Axon continues to be one of those companies you can count on quarter after quarter. I've held that stock for almost a decade. And despite the fact that it is extremely expensive, even at the current growth rate, the company continues to execute, and it's extremely hard to sell a company like this. This is one of the things that I've learned as a long-term investor, is that a stock can always get more expensive, but as long as the underlying company is doing well, there's no real reason to sell. So I'm going to dig through the first quarter results, show exactly what's going on and how this addressable market continues to expand for Axon. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's look at the quarterly performance. And this is just a nice visual that shows exactly what's going on here. 31% revenue growth in the first quarter, $604 million. The connected devices, $341 million. This is always one of the things that I think is interesting, is that things like tasers is actually still a huge business for Axon. It's not just about software, although that software business is now $263 million in the quarter. Annual revenue continues to just surge. 2021, that was only $866 million, but through a compound annual growth rate of 34% over the last 3 years, now $2.2 billion. The other thing that's really changed over the past few years, the past 5 years or so, is the fact that they're booking longer and longer contracts with their customers. So you can see here that the future bookings of contracts, now $9.9 billion. That's down a bit from a quarter ago. There is some volatility in when these contracts are signed, when law enforcement agencies in particular have the money to make these kinds of decisions. But annual recurring revenue continues to grow, $1.1 billion. And this net revenue retention rate, this came from the SaaS industry, but now that the company is much more of a services company, you want to have a net revenue retention of 120%. That's kind of ideal. And they're well above that. And 96%, a whopping 96% of customers of revenue is coming from customers on a subscription plan. So that's that kind of long-term relationship you want to build with customers. What I think is ultimately the most interesting about Axon right now is that this story can continue to grow because they continue to expand their potential addressable market. They talk about a couple of those things here. They keep updating this number that you see on the right. This years ago was $40 billion. Now it's $129 billion in the total addressable market. And they say that in law enforcement in the US, state and local, under 15% penetrated. So still a lot more body cameras that can get out there, tasers that can get out there. And then you start to move into the enterprise. This is a huge potential market. Again, we've sort of seen this be rumored for Axon, that maybe retail workers are going to start wearing body cameras that are a little bit more inconspicuous from some of the ones that law enforcement wears, but could record things happening. And then Axon has the database to actually track and analyze all that data that keeps coming in. Same thing with international governments. And then the one they've added in the last few years is civilian. This hasn't really manifested, but it's very possible they could get into selling tasers and body cameras. I'll go to some of those potential products, but there are multiple areas of growth. I think drones is one thing that they're really leaning into. And then some of the modern technology, this is virtual reality training. We're actually using a taser and a VR headset to go through simulations to actually prepare for how you would use some of these devices. And then if you're not familiar with what their subscriptions look like, this is just an idea of one. $99 per month gets you a taser, body camera, and digital evidence management. This is kind of where things started. That was 2017. Now their premium service, you get VR training, their records business, D-Drone. You go up to the next level plan, that's $550 per month. You're adding Draft One, live translations. You're actually trying to take some of the work off of law enforcement agencies and put it on Axon. That's where they're really adding a lot of the value today. Can you reduce the amount of time that someone spends doing paperwork? That's a huge value add. That's why they're able to increase these prices. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is where some of these new products are really interesting for Axon because it keeps adding to their addressable market. These are a couple that could be used in public. You have a light post here that has a camera on it, turning a street light into a smart public safety node. And then this is just another camera that's solar powered, provides live streaming designed for high traffic and hard to reach areas. At the same time, they announced a partnership. This was late last month with Ring. So that's going to be part of that Axon Outpost and Axon Light Post product. Again, just expands their partnership or their ecosystem even more. I thought that maybe they would get into providing security cameras for homes, but they're playing more on the software side of this. That makes a lot of sense, tying into their law enforcement ecosystem. Ring can do the consumer side of things. The other thing I wanted to highlight was their updated guidance. They increased their guidance for the full year. Previous guidance is here on the left. That was provided just at the end of February. So just a couple months later, we're looking at 27% growth rate at the midpoint. Again, management typically beats these guidance numbers, so don't be surprised if actual growth is closer to 30%, maybe even over 30%. Adjusted EBITDA, they're now a very profitable company. They basically forgave profit for quite a while to just grow the business at a 30% rate. Now they're starting to be really profitable, about a 25% margin on their revenue on an adjusted EBITDA basis, and their capital expenditures, those are going to go up or like be on the high side a little bit because they're investing in the capability to actually produce a lot of these products themselves. So like I said, Axon is a stock that I own. It's very, very expensive. Just to go through the numbers, the forward price to earnings multiple for Axon is 100. The forward enterprise value to sales multiple is 17.7. Right now, the market cap is $47 billion. So you look at the full year guidance at $2.6 to $2.7 billion. That's a very, very expensive stock. But like I said, companies that grow at 30% for a decade are the kind of companies that you want to hold long term. So I am very uncomfortable by the valuation, frankly, with Axon, but I don't want to sell the stock because the company is performing so well. Those margins are expanding, continuing to grow, continuing to expand their addressable market. These are all extremely bullish things and exactly what you want to see from a company. But the key is buying early and just hanging on for the ride. This is not a stock that I have added for years at this point, but is now a huge, huge percentage of my personal portfolio. So Axon continues to crush it. Stock jumped again on Thursday. No real surprise there with the big numbers, but don't be surprised if the market does pull back and we start to look at valuations a little bit more closely, if this could be one that is hit a little bit, but hard to argue with how they're performing as a company. Let me know what you thought about the quarter from Axon. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.